What's up YouTube, it's Louis here bringing you today's cryptocurrency video. We're going to take a look at Bitcoin. Thank you guys for subscribing. Hope you guys had a very Merry Christmas, of course, a Happy New Year, but I think I will see you guys before the New Year. I don't know about a video on the first day of the New Year though, might be a bit out of it, but I'll try and get some out as much as possible. If so, probably be a late one. And maybe just the Bitcoin one, but we'll see, I'm not sure. So the monthly time frame is doing exactly what I was saying a few weeks back or however long ago. So I said that we either want the monthly close here or here, and I was expecting if we were to lose that 12, let's get the 12, if we were to lose the 12 we'd come to the 20, but that hasn't come, hasn't it? So you've just come a bit below the 12, got back above it, and it looks like you're sitting on here right now. So if we were to get a close on the wicks, or as long as it's above 47k, we're good for continuation basically, because you're sitting way above the 12 EMA. So it's in a bull trend, in a bull market, you don't really lose this in previous bull markets. So here, the last bull market, never really lost it until you did the dead cat bounce and then went into a bear. So here we had the black swan event, so you don't really count this, but you can if you want. And then of course continuation of the bull market, you haven't lost it, so we're not expecting this to lose. If you lose it, obviously you'll come into the 20, maybe form a dead cat bounce, and then of course rolling over more. So now we'll take a look at the weekly time frame. The monthly's looking good, all acting as expected. So I've just posted on my Twitter, so make sure you're following my Twitter, Louis_crypto. It's basically talking about this bullish engulfing, and this over here is a bullish continuation pattern. We had one right here where the green one eats entirely the red candle's body, and that's what we're seeing right now, the green one eating the red candlestick's body. So of course it's a very good bullish continuation sign, but we are still below the EMA, so we do want to see these see the candles get back above it. Of course, if we were to get rejected right now, obviously we're still consolidating between the 55 and the 20, acting as support and resistance. So if we were to get rejected, I would like to see a higher low to confirm the change of sentiment, the change of trend, because of course the bears were in power, bearish engulfing. Look, the red one eats the green one. What happens? Roll over. The green one eats the red. We should start going back up, and we know anyway from the analysis we've been doing, we were expecting Bitcoin to break back all the way to about 69k out of that large falling wedge that we've been talking about over the last few weeks. So I actually gave you that falling wedge the moment we dipped. Look, when we got this point over here, I drew one from point 1 from here to here, point 2, but then we changed the support from here to there. But we'll go through that a bit later in the video. So what I do like about the weekly time frame, of course, the bullish engulfing, but not only that, the EMAs, the 12 and the 20, have not formed a weekly bearish cross. Now, of course, this would basically tell me that over here, it told me that we're going to go to the 55 EMA, have a little bear market scare where we lost the 55, but we closed back above it the following week. So of course we don't want the bearish cross, we want to get back above it, but in the meantime we have actually respected the 20 weekly, so this is why we potentially roll over a little. We'll look at the other time frames to see where, but looking at the weekly, let's potentially hold 49k. Basically let's hold 49k as support, 48, 49k, this area here. If we were to roll over, use that psychological level before continuing back up, trying to break that. That could all happen in this week. It doesn't have to be 2 weeks. It could be that we come down first, form a wick, and then break through it. And if so, then of course I want to see on the daily time frame or the weekly time frame the next week to come back and retest these EMAs. And you see here, it did it in one candle where you first come down, retested, and then went up. So the same could happen here, where you come down, retest, and then the following week go up. It doesn't have to be a red candle that comes down. As you can see here, this was a green candle, but you did get your retest because it was a week. It's a long period. So now let's get to take a look at the daily time frame. Don't use the 12 EMA much on the daily, but it's like a precursor. If it does a bullish cross or bearish cross, it's a precursor of the 20 and the 55. So look, 20 and 12 bearish cross, and then you got the 20 and the 55 bearish cross. So you've almost got that on the daily time frame now for Bitcoin, don't you? Where the 12 is about to cross over the 20. What I do like though, guys, is that you've invalidated something very big. Can you see the 20 and the 200? You never really want to see that, because that's basically telling you, yeah, this is like when you're under this and you're retesting as resistance, this is basically like a precursor to the 55 going under the 200 EMA, which is the death cross. But We don't have to worry about that now. The 20 has come back above the 200, signaling a bull trend. And you can see with the daily time frame, we actually respected that, the 200, the 20, and the 12 EMA with a bullish spinning top, basically a bullish continuation pattern. And with that, you're sitting on previous resistance points. Can you see? Let me just leave it on exactly. Yeah, you're sitting on this previous resistance points over here, basically, with this candle. So that's the daily time frame. It's looking very positive, isn't it? So we'll take a look closely now on the 4-hour time frame. So yesterday we started dipping. Let's get rid of the 12 now. Let's zoom in a bit. So yesterday we were down here, I think, and I said that until we get back above, we're going to come down to here, the 55, come and retest these points. But I think we had already retested the wicks. Yeah, we retested the wicks. This wick came down a bit deeper, retested some more, some more key areas. But I said to you yesterday, guys, that if we were to get back above the 20 and confirm its support, we would invalidate the 55. And that's what we've done. And I'm going to get the fibs out for you now, because you can see that you've come down, you start coming back up. So potentially this has stopped going down, basically, because you got back above the 20 and you have back tested as support. So if you're to lose this purple line again, I think you'd get a wick off the 20 right now. Lose the 20, back to the 55. So let's get the fibs. I'm going to measure from here, your last where you started exploding, basically, and you can see exactly it bounced off the 0618. So that's why we've bounced from there. And you can see now we're trying to get back above the 236. So if we were to roll over, because you're under the 236, it would make sense if we come to the 382. But this large purple line, which is a larger 382, is what's holding us up right now, this white line and the purple line. So if you're not seeing this if we're not seeing Bitcoin come down to here, this is the reason why. But if we were to, I'd like to see a wick off of it, basically, and basically close back above this purple and white line. So now that we can say this is done, what we need to see Bitcoin do is to break these highs, of course, but of course get above the 0 point. And this 0 point is the ascending triangle, this large ascending triangle's resistance, the neckline. And once you break this neckline, you're going to 57.5k. So now that we've had this dip and we're trying to continue up, we can get you bullish targets to the upside, right, measuring from the swing low to swing high. So you've had this push, exhaustion phase, continuation. That's why we're going to measure the exhaustion phase, because that's done. Now we're continuing the trend. The trend is up because you've come up impulsively, correctively come down, and now you're going to continue impulsively, just like you did here. Impulse, correction, impulse, impulse, correction, impulse. Oops. So now our 1618 is sitting at 53,400. So not saying it's going to happen exactly like this, but once we're above this 618, which is currently resistance, that's why we're sitting on this smaller 050. Once we can confirm it as support, we're going to head up to the 1618 at 53,400. After that, this is where we could potentially roll back over to this ascending triangle's neckline, flip this resistance back into support, just like you had here, support with that wick. So we want to see that happen again. Look, resistance. So to prove that we're going to go up, we need to see this flipped into support, wicks going through, bodies closing above. Once you've done that, then we will have this technical target here at 57,000, but we're going to have dips along the way. Maybe come to the 050, break it, meet this 241 at 55.5k, come back to that 050, then head to that 1618, maybe get rejected in the short term and then reach that target, or you might reach that target with an overshoot before correcting. And then if you were to lose that swing high, probably come back down to that 050 and then take that out, because this is how trading works. You don't, because basically measuring from here, the top, to the bottom of the dip, this is where we're actually correcting to right now. Okay, this is what I said in yesterday's video. We are going to come to 57k because this is your 0618. We have broken out of this large falling wedge over here, like that, bearish channel, falling wedge. So the resistance point, resistance point, resistance point. You are now retracing to each resistance point, and we have met the first one over here. So next target is, of course, in and around this area, which is your 0618. So we're in a technical target to that because you've come down impulsively. Now we're correcting. And then so what should happen from here, if we're using the fibs correctly, is a continuation of the trend. But if you were to break above this 0618, confirm it as support, then we have bullish targets, and our target up here is at 94k. So that would be your next impulsive wave up to the upside, basically. But of course, if you get rejected from the 0618, we must hold these fib levels like the 382, like the 050. So something like this, where we come up, we could come all the way back down to this 50k area, which I think on the daily time frame, yeah, this is where your last swing high on the daily time frame is. So we could get all the way up to the 618, come back down to that daily time frame, the 382. Basically, guys, as long as you stay above the 0 once you've done this, you could still create a double bottom, basically. But I'm not seeing that, I'm not envisioning that, because of course at the moment it's not done anything like that. So going back to the 4 hour, that's what we want to see. We want to see, of course, we're going to retrace from the 618 once we get there, but we are in a technical target to there. But once we retrace to it, once we retrace from it, as long as we're holding the key fib levels like the 382 or the 050, then we should go and try and attempt to break it again. Once we break it, we got target to the upside about 94k, and that's what I'm seeing for Bitcoin right now. Of course, since the breakout, we are on targets to the minimal this, and then obviously the 66k and then 69k, as long as we're above this pink purple line over here, this falling wedge. So I'm now going to get rid of the smaller falling wedge right now, because we met the technical target, so we don't have to worry about that now. So we just need to worry about the ascending triangle right now, which is this. So of course that's what's going to take us to 57k slash that larger 0618. Perfect, guys. I hope you enjoyed that video. I'll catch you in the next one, and as always, peace.